Hey guys, a lot of you been asking me about how to put an options order in, especially for you new traders that hopped into our Discord server. So I'm creating this video in regards to that question. I'm using Robinhood here. As you can see, it's a new account. I use personally Thinkorswim, and I strongly recommend using TD Thinkorswim as if you're going to take trading seriously, or use Tastyworks. I've never used Tastyworks, but I heard it's a pretty good option for new traders as well. TD Bank, I would say, if you plan to take trading seriously and you want more tools, like and for you to have access, I would say move over to TD Bank. It might look complicated at first, but I think it's definitely worth it. Robinhood itself, I think it's very simple. Nothing bad against it, but if you're going to be trading on a high frequency stat, then you should definitely move to something that actually executes your order quick, and you have certain buttons, hotkeys, setups, or whatever you can that will help you get those good execution prices. Anyways, let's get started. So today I'll talk about how to purchase a call or a put on Robinhood. If you guys want any other type of video, I am open to do credit spreads, debit spreads, selling bear call spreads or bull put spreads. Whatever you guys want, just leave a comment down below and I will get back to it. I just want to make sure that there's people actually watching the video and actually taking trading seriously, and I'll do my best that I can to help you guys. For like covered calls and stuff, I'm not sure exactly how to do it on Robinhood, but I'll try my best to learn because I usually do it on TD Bank. But anyways, let's get started. So let's go to Tesla, since a lot of people love Tesla. So we type in Tesla, go to Tesla. And once you get to this page, I think on the app, it will say like trade. And then you click trade, and then it will say options. You click options for me, and we will be brought to this page. So the current price of Tesla is 405.8. First of all, I hope you guys know what a call or a put is. Just for some clarification, in case you guys don't know, or if you're completely new to options, a call is saying that you're willing to buy the stock at a specific price on a specific day. So, actually, let me explain put as well. A put is saying that you're willing to sell the underlying stock at this specific price on that specific day. Sounds a little confusing at first, but once you get into it, it's really very simple. So, for example, let's say if you wanted to get a call on Tesla, what you're saying is that if we were to get this 405 strike price Tesla call, we're saying that on October 2nd, which is your expiration date, you're willing to buy Tesla at 407.5. So you're saying that Tesla is going to go above and beyond that. So on Robinhood, you have this break-even price. The break-even price is just saying that on expiration, you will be break even if Tesla is at 425.23. That is factoring in the premium price you paid over here and your strike price. So if you do a little bit of math, 17.73 plus 407.5, that is equal to 425.23. So on this date, if Tesla is at 425.23 and you exercise your contract, you wouldn't be at a win or at a loss. So that's also very important to remember, especially if you plan to exercise the contract. A lot of options traders don't actually exercise the contracts and just ride the premium wave up or down for puts. Um, so how to put this in? So you just go here, press plus, and that will be added to basically your shopping cart. So the price is 17.73. If you've never traded options before, everything is times 100. So if you look over here and you press continue, the actual price of this contract, let's go back to 1773 just so that you guys could see. 17.73. It's actually $1,773, not 1773. A lot of the time people actually think it's actually $17. There are contracts worth that cheap, but that's another topic to be discussed. Or even if you go to a a lower cap stock, like a small cap, $4 stock, whatever, the premiums are going to be way cheaper than Tesla. Although I don't think Tesla's premiums changed much, even though it did the split, which is pretty terrible because even though I want to trade it, I think I overload myself with risk if I do get in with those prices. But that is how you put in an order for a call. Same thing for a put. Let's take this out. You go to buy and you go to put. So for this example, let's just use 405. So the share price is currently 405.80. If you're going to buy a put, you're saying that you're willing to sell Tesla at $405 on October 2nd. So this is the break-even price, exact same thing. You would take 405, which is your strike price, minus this premium price, and you will get 388.27. So if the stock is 388.27 on the expiration date, you will basically be at a zero loss and a zero win scenario. Ultimately, you want it to go below that, obviously. So if it hits 370 or 350, 320, you would be at a profit if you do decide to exercise the option, or you could just sell the option itself. A lot of people think that you can't sell the option and you have to wait till expiration or for it to hit a certain price. You don't need to do that. You could literally, let's say your spot price, which is the price you entered the contract at, is 405.80. You could sell it once it hits 400 and you will probably be at a profit if all the Greeks are normal. Because there are some times where it moves down a little, but you get killed by data or implied volatility. These are things that you should know and be aware of if you're starting to trade options. And that would be in another video. Just make sure you leave a comment below so I know what video you guys want. But to put this put order in, you simply do the same exact thing. Plus, you want to do a limit price for any order that you place because market orders could get you killed, especially if the spread on these contracts are humongous. Here you see that the spread is around 1650 to 1695. So you put in an order for whatever price you want. But if you was to do a market order, it would just fill at the nearest price possible to get you executed quick. So beware of that. A lot of people enter contracts and they're automatically at a loss and then they end up selling it. You don't want to be that person. So make sure you use a limit price and try to wait for an opportunity instead of just rushing in. Anyways, that will be the end of this video. I hope you found it useful. Please leave a like, a comment below if you want more videos in regards to this. This is obviously a very simple video and it's there to help new options traders profit and know how to put in an order. So have a great day, guys. I'll see you guys.